Hey everyone, today we're going to be looking at a video on CNBC that's talking about mortgage interest demand, when someone become a buyer, historically what's happened with interest rates, and we're going to sprinkle in some commentary on what's been happening in the Portland housing market as it pertains to this conversation.
A line in the sand for home buyers this year, and it has to do with, no surprise, mortgage rates. What number do they refuse to go over? Diana Olick is here to explain. Diana?
Well, Kelly, for most buyers, the mortgage rate determines what they can afford, right? Because you buy the house not based on the price, but on the monthly payment, and the monthly payment is all about the rate. But a new study by John Burns Research found a majority, 71% of buyers, said the highest rate they would accept is 5.5%. That apparently is the tipping point. And it didn't matter the age of the buyer either, as in those older consumers who may have had a higher mortgage rate many years ago. In addition, 62% of consumers said normal mortgage rates are below 5.5% now.
So these surveys are interesting, right? Because she's right about the fact that people buy houses based on the monthly payment. It's just like buying cars. People don't really think about the debt they're taking on. Most of the consideration is on the monthly payment. My experience working with homebuyers in today's marketplace, the rate doesn't matter actually. It really is just about the payment, the need and want for housing, and if that home fits their criteria. I think when we look at something like the survey, we could just easily say that rates are 6.5%. Yeah, I wouldn't want a mortgage unless it was 5.5% because everybody wants a deal. So let's get back to the video.
Just so you know, the current rate is about 6.4%. And of course, we've been talking about these higher rates since they shot up early last summer. But historically, the 30-year fixed rate in the United States averaged 7.75% from 1971 all the way to 2023, reaching an all-time high of over 18% in 1981 and a record low of 2.65% in January of 2021, the height of the pandemic. Now, it's only been since the Great Recession and quantitative easing that rates went below 5% and then went historically low in that 2 and 3% range. Now, those ultra low rates, of course,
So if we look at that and we just go back to 1992, which is as far back as we have housing data for the Portland metro area, rates were all over the place if you looked at that graph. But housing pricing has essentially does one thing, which has gone up. There have been 4 years in the past 26 years where home values have declined despite interest rates, despite what's been going on in the economy. Despite interest rates, there's always buyer demand. Despite interest rates, people are always moving in and out of their mortgages. I think, the big question is, will interest rates crash the housing market? And so far in the Portland metro area, that has not been the case.
Were the thing that lit the fire under home prices. So it's no surprise 63% of current homeowners think homes are overpriced, as do 83% of renters. Kelly, you got all the numbers?
I think it's really easy for everyone to think everything is overpriced. I started selling real estate in 2007. And every year, dozens of people have told me that home values were going to decline, and they haven't. I've spent 4 years since that time period where home values did decline, but in a 26-year, 30-year period, those were the only years where home values have declined in the Portland metro area. When you look right now, we have an undersupply of homes. We have builders that aren't building enough homes in the United States, and that is the fuel that's keeping home prices high.
I do believe everybody follow. I mean, is there anything more followed than the housing market and mortgage rates? But Peter, I was just going to say 5.5% might feel better, might unlock a new wave of demand, but the market is resilient even with rates where they are right now. To me, it seems surprisingly resilient.
From a pricing perspective, absolutely. I mean, I'm still hearing about bidding wars.
Right, same.
That's because of still the dearth of inventory. I mean, to Diana's point, 90% of the mortgages outstanding are below 5%. I think about 70% are below 4%.
Wow.
So you have a lot of these people that are trapped in their houses, whether they want to or not, because they just don't want to give that up. Now, I think as we get through the spring selling season, which is the hot season, it'll be interesting to see how this plays out on the price side. But no doubt the lack of inventory is keeping things elevated, which would then potentially reduce the pace of transactions even further.
The pace of transactions has been reduced in the United States. Last year, there were, I think, 1 million fewer homes that sold in 2022. They're expecting something similar in 2023. Homeowners are buyers. They sell and then buy. A lot of people are choosing to stay in their low mortgage rate, which is keeping homes from the market, which is keeping supply low while demand is high. You generally see in the Portland metro area 30,000-ish sales a year. And this year we're pacing close to 25,000. And a lot of that has to do with the lack of listings coming to the market. Supply and demand is a really easy thing. When there's low supply and high demand, values go up. And that's just something we've been seeing. Furthermore, you see homeowners fiercely protect their equity. Selling a home is not easy. Selling a home is really emotionally complex, and people will fight over $5,000, $10,000, $15,000. People are generally not willing to do large price reductions to sell a home. They'd rather stay and wait for the market to correct. In our case, in the Portland housing market, we've seen the market slow down, but we haven't seen a correction in terms of value. We've just seen the pace of appreciation slow.
Andy has made this point as well, Diana, but if we see mortgage rates fall below, as Peter said, 4%, 5% even, I mean, that could suddenly see more inventory, lower prices. It could really spur some moving activity.
Absolutely, and inventory is the key right now. That's the problem. New listings are down phenomenally from a year ago. There's just nothing on the market, and if it is on the market, it's priced incorrectly, and that's why it's sitting. But I would also note that about a quarter of all home purchases right now are all cash, so no mortgage rate involved.
In the Portland housing market right now, about 15 to 20% of the home purchases that we've been seeing are cash, so a little bit less than what she's speaking to on a national level. If interest rates go to 4 and 5%, we're just going to see more multiple offer situations. One of the commentators said values would come down. The opposite would occur. If more buyers enter the marketplace, it's going to be a more competitive landscape. And again, it goes to the fact that we just have an undersupply of new builds in the Portland housing market.
And that is really historically high for the market. Usually it's well below 20%. We're also told that investors are moving out of the market right now because prices are so high, and yet that all cash number hasn't pulled back very much yet. And that means that people have so much capital that they're sitting on. Maybe it's in a home they already have or somewhere else, but they're putting it in because they don't want a mortgage.
Absolutely. Diana, thanks. Peter, thank you as well. Peter Bookvar and our Diana Olick.
So let's talk about what it would take for housing prices to crash. In the Great Recession, we saw more than twice as many homes list for sale as we saw homes selling in the Portland housing market. During those years, we saw values decrease anywhere from 3% to 10% annually for a 4-year period. But we got those values back incredibly quickly when the market turned around. So if you have any questions about are values going up, down in your neighborhood, how should you navigate this real estate market that we're in? It's interesting. It's not crazy like some people talk about. You can get in touch with me, David at HillshireRealtyGroup.com.